show you guys real quick what an intermediate high and intermediate low is and how you could use them in the market to hit your TPs or entries. So let's go over here and see the drawings real quick that I drew for you guys, right? We're gonna sweep a liquidity right here, an internal inside of FVG. So what is the intermediate high? Resting inside of a FVG. So we have a FVG right here. What happens? It comes down, it taps at one time. We need it to retap to be called an intermediate high or low. So after it taps that, we get an internal resweep like this. And then we can find our entry right here, IFVG, and then target the highs, internal, whatever you want to target. So I have an example right here. This was previously too. This was what time? This was 26. Okay. So the 1 hour tapped right here. See that? And then what did we do? Just like our drawing, we resweeped inside this 1 hour. That's the internal resweep. That's called an intermediate high or low. So after we did that, let's go to the lower time frame here. Looks better on the lower time frame, right? We got this sweep here once, and then we resweeped it again inside this whole 1 hour PD array. And then what did we get out of this? We got this 5-minute inverse. Enter here. You could have it right here at the wicks or at the body of the candle. Depends on your conviction. And then we have what this relative equal highs right here. And also, like I was saying, it could be used as your TP. Just like I put over here. Right. We could use these for the reverse or be used for your TP, right? So what do we see right here on the 15-minute, right? We have this FEG that's been tapped one time. What happens after it's tapped one time? Mark it up because it's an intermediate high or low. We need it to tap again, and it did. So that could have been your TP. That's the safest TP. Price is always attracted to these intermediate highs and lows. Go and back test this, and you'll see it everywhere in the market. But yeah, that's how you use them.